The company behind Dunkin Donuts, that restaurant chain, has set the pricing terms for its initial public offering, and they're much higher than the company number that was released back in May. Dominic Chu is here with more. So Suzanne just gave us all these concerns about a rocky market.
That's right.
And yet we have another company choosing to enter the market.
To enter that volatile market. You always hear that word being tossed around. What it comes down to is whether or not companies want to be able to cash in on this IPO craze. There is a huge demand for them. Coffee, I don't know if you're a coffee drinker or not. I don't know if you're a Dunkin'.
How can you not be?
I don't know.
I don't understand.
Especially with our hours, right? Dunkin' Donuts, I like Dunkin' Donuts coffee. I know a lot of my friends do, but here's the nuts and bolts, so to speak. $461 million. They're going to sell about 22 million shares, between $16 and $18 per share. But the real interesting part here is they're backed by private equity as opposed to venture capital. So you hear us talking about LinkedIn, you hear us talking about all these hot tech IPOs that are venture capital based. This is a private equity-based deal with some of the big names in the business, Bain Capital, Carlyle Group. You're also talking about Thomas H. Lee Partners, who, along with management back in 2006, took this company private after they bought it from Pernod Ricard, the big French spirits maker out there. So, again, this is a huge deal for Dunkin' Donuts, hundreds of millions of dollars, and that's why it's important here.
And hopefully for the private equity firms, they hope to recoup some of what they paid in the first place.
Well, the interesting part about this deal is the private equity firms are not selling in this right now. Dunkin' Donuts will be selling all the shares. The proceeds will be used to pay down debt. Remember, with these leveraged buyouts, these companies take on a lot of debt in order to finance that particular acquisition. So in this case here, those private equity investors, not per se selling shares in this, but what they're doing is making it more attractive down the line. So hopefully it becomes a better business down the line for them to sell into it.